Hello, everyone, and welcome to Kilowatt. My name is Bodie, and I am your host, and we are going to talk about Ford's Q1 2023 earnings call today. Now, as with GM's earnings call, Ford's earnings call was very, very finance heavy. Not a lot of good information on EVs. And because of that, I only have 3 clips to share with you from that earnings call. So we're going to do a little bit of news up top, and then we'll jump into the earnings call. Before we get to that, I want to thank a new Patreon supporter, and that supporter is Electron Raceway Fabricator. Whew, that was hard to say. That's a really fancy way of saying electrician, because I had to ask, because I was like, what does this mean? And it turns out it means master electrician. So thank you so much for supporting the show. If you would like to join Electron Raceway Fabricator, you can go to patreon.com/kilowatt, or you can go to supportkilowatt.com and you can sign up and join there. We also have an Acast Plus membership, and all of that information is in the show notes. Now, last week, I made a mistake. When I was mentioning all of our Patreon supporters and our contributors to the show, I neglected to mention David, not on purpose. I just completely spaced it. I did have your name written down, David. I just skipped over it for whatever reason. It was the last one on the list, and I didn't read it. So I apologize about that. And on that very apologetic note, let's start with our news here. It might be the end of the road for Lordstown Motors and their endurance pickup. Lordstown is looking for a new production partner, just in case their partnership with Foxconn sours. So sounds like it's going to, if they're looking for a new production partner. You know, I thought Faraday Future was dead so many times in the 6 years that I've done this podcast, almost 7 now. I'm not going to write a eulogy for Lordstown Motors just yet. They may end up pulling it off in the end. Then again, they may not. Currently, their stock at the time of this recording is 37 cents a share. So pretty low, pretty low. Fisker has opened up 2 customer lounges in Germany. They're called Fisker lounges, and this is just basically a place for people to go and get information. One of them's like huge. One of them's like 4,000 square feet straight in the heart of Munich, and the other one's slightly smaller somewhere else in the city. But yeah, I'm sure that's pretty cool. If you live in Germany, in that area around Munich, and you go to one of these places, take pictures and report back. I'd love to see what they look like. Fisker has also delivered the first Fisker Ocean in Europe. They did this in Copenhagen. This is fantastic. I can't wait for them to start delivering these in, we'll call it volume, even though it's probably just going to be a few hundred at a time. That's volume if you've only delivered one. So hopefully that will start ramping up for Fisker. And because we have this vehicle delivered, we do have some more details on the Fisker Ocean now that it's being delivered to customers. 250 kilowatt peak charge. And we don't have any official numbers from Fisker, but the author of the article that I read thinks that the DC fast charging time from 10 to 80% will take 33 minutes and 6 seconds based on that. It seems like that's a little low. I mean, that seems like that's slow. Seems like it should be faster than that. Let's see here. Towing capacity, it'll tow a bit over 4,000 pounds or 1,820 kilograms. The larger battery for the Fisker Ocean 1 Extreme and Ultra will be 113 kilowatt hours, and that will be a nickel, cobalt, manganese battery. And then the battery for the base model of the Fisker Ocean will be LFP-based battery. The big battery will have a range of 440 miles or 707 kilometers. I'm interested to see if that is true to life. Like, if you're one of those people in Europe or the only person in Europe who's accepted delivery of this vehicle, could you test that out and let us know? I'm curious. All right, let's go ahead and move into our Tesla news. Tesla has teased a tool rack for the Cybertruck, and I'm going to be honest with you, it looks super dumb. I don't even It does not look nice. You can look it up on the internet. I don't even know how to explain it. It just looks dumb. There's some cyber shovels on the side of it that look pretty cool in the picture that they showed, but the actual tool rack itself does not look good. It's not a good looking rack. If you're in Europe and you're buying a Model Y, you now have the option of a new color, Midnight Cherry. Based on the pic that Tesla teased, it's kind of hard to describe because in certain light, the car looks like it's kind of like a dark red, and in other light, it looks like it's purple. The picture they posted of this Model Y was in a kind of a foresty area on a road, and there's lots of shadows, so it's kind of hard to see. I'm guessing the car will look a little different depending on how much light it's exposed to. So it is very nice looking. And I looked to see if it's here in the United States, and it's only in Europe, which is unfortunate. All right, our final story here. Full self-driving beta 12, version 12, will utilize end-to-end AI, according to Elon. In the past, he has said that functions like decision-making and driving input wouldn't require AI and would just utilize regular programming. But recently, Elon tweeted, arguably, version 11.4 should be version 12 as there are so many major improvements. Version 12 is reserved for when FSD is end-to-end AI from images in to steering, brakes, and acceleration out. So I've seen a couple of articles making a big deal about how Elon and Tesla changed their mind on this. I don't think this is a big deal at all. I think this is like, if you have a better way to do it, you should absolutely do it, no matter what you said in the past. You're always presented with new information. All right, before we jump into the Ford Q1 2023 earnings call, I do want to remind everybody that I have another podcast. It's called Shuffle Playlist. And on the latest episode, which went up this week, we talk about Ball and Chain from the band Poison. We're coming up to the end of the season for that podcast, and it's actually performing very well, way better than this podcast did in the same amount of time. So I'm really happy about that. So I'd encourage everybody, there's a link in the show notes, go check out Shuffle Playlist. All right, let's get Jim Farley, Ford CEO. Let's get his opening remarks. And just so you know, this is edited just for the content that is pertinent to this show. So the actual opening remarks were much longer than this, but this is just the EV portion of his opening remarks.
Now, Ford Model E operates with a startup intensity to build a profitable EV business with a differentiated portfolio and a differentiated customer experience. You as investors now have true visibility into how Ford Model E's profitability strengthens over time, supported by volume-driven operating leverage, improvements in design and efficiency, and of course, lower battery costs. We're on track this year towards a contribution margin approaching break-even in Model E, and for our first-generation products to be EBIT margin positive by the end of next year. Wholesales were down in the quarter, which deleveraged our cost structure. Part of the decline was planned, as we have brought Mustang Mach-E production down for several weeks so we could almost double the capacity, and we are now hitting that 35 job per hour run rate in the plant. Volumes were also impacted by the lower output of F-150 Lightning. We did the right thing, and I congratulated my team many times by immediately stopping production and working with our battery supplier, finding and then fixing the root cause of a fire that happened on the Ford property. We're now shipping Lightnings again, taking new orders, and increasing production to an annual run rate of 150,000 units, about double what we do now. We are also revealed an all-electric Explorer in Europe, which is now very well received. We made progress on Model E in the quarter, advancing our industrial system to scale EVs. The site preparation is already underway for our LFP battery plant in Michigan, and construction continues at the Blue Oval SK Battery Park in Kentucky and, of course, Blue Oval City in Tennessee. We now plan to transform our Oakville assembly complex into a Canadian hub of electric vehicle and battery pack manufacturing. We also continue to make progress towards locking in all the raw materials that we need to support our capacity targets in 26 and beyond. Model E is our center of excellence for technology, including software. A good example of that is Blue Cruise, which continues to be a hit with our customers. Consumer Reports rated it the top advanced hands-free driver assist system on the market in the US, and that was just version 1.0. Our latest release, which we're OTAing to customers, is version 1.2. It automatically changes lanes with the tap of a turn signal, and it delivers a much more natural driving experience hands-free. We also launched Blue Cruise in the UK on Mustang Mach-E and became the first OEM to gain approval for hands-free highway driving speed anywhere in Europe. And now Blue Cruise has more than 70 million miles driven to date, and we continue to upgrade Blue Cruise for customers with each over-the-air update. Before I turn over to John, I want to share our thoughts on how the EV market is evolving in our eyes. It's easy to look at the landscape of the EV market as a monolith, but we plan to be surgical about where we play and how we win with the right products, the right cost structure, and the right price points. We do not subscribe to a win vehicle share at any cost approach. We look at share of vehicles, of course, and share of revenue. We also look at share of profits and share of the customer lifetime value. And we believe this is the only way to ensure we drive appropriate returns or return on capital over time. By 2025, we now expect there to be 45 EV models to be offered in the US in the small and medium utility segment. It will be a very saturated two-row EV market. Against this backdrop, to ensure profitable growth, we know we have to have a fresh, compelling offering with the right cost structure, something we continue to improve with the Mustang Mach-E. We also found that customers are very loyal to full EV powertrains once they enter, but they are not brand loyal for their first purchase. We capitalize on that by getting to the market early with the Mustang Mach-E and our whole lineup, and it continues to reward us with over 60% of the customers new to Ford. We're seeing that the second EV purchase is much more loyal to the brand in these developed EV markets. So we're glad that we have all these customers in our digital and physical ecosystem. We are aggressively lowering our product costs for our current and next generation products. You'll find out a lot more in Capital Markets Day, but in fact, for Mustang Mach-E, from launch through the end of this year, we'll have reduced the bill of materials for Mustang Mach-E by $5,000 per vehicle. Now, in contrast to two-row crossovers that we believe will be a very saturated market, we believe Model E can be highly differentiated in markets where we know the customer well, like the three-row utility space. And as I said, we'll share more about at our capital markets event later this month on our product strategy. I had a chance, along with John and most of our leadership team, to go to China in the last few weeks and look at the EV market in a Gemba go and see activity up close. It's interesting to see how customers are no longer just attracted to traditional luxury brands with EVs or even hardware design anymore. Outstanding hardware styling, performance, quality are just a given in the EV digital marketplace today. The best new brands are offering integrated digital, retail, lifestyle, and experience that are software defined. This is firmly in our sights for our second generation EVs. This software as a differentiator, plus a radically different cost structure and the ability to attract attach value-added software and services gives us confidence we can compete and win in unit, revenue, profit, and vehicle share while delivering appropriate returns. And Ford Pro is already there. I'll wrap up by saying we are pleased, but we are not satisfied. As I said, solid execution and some really thrilling progress advancing our Ford Plus plan. I look forward to seeing many of you in person in 3 weeks for our capital markets event, where we will go much deeper into our strategy and our progress.
His original opening remarks were over 16 minutes long, and throughout that, he talked about software services again and again and again, especially when it comes to Ford Pro. So subscriptions are coming to Ford. I'm not sure how I feel about that. Mostly, I'm not happy about it, but I'll talk about that later. He talked about the Oakville facility in Canada, which we talked about on this show, and the Explorer EV for Europe. We talked about that. He briefly mentioned Ford's response to the F-150 Lightning fire that happened in their facility parking lot. That's great, and they fixed it, and I'm happy they did that, and we've talked about that in the past. But Ford had to stop production last week. This is not that big of a deal. It was kind of a minor thing. They were experiencing an issue with their door handles for the F-150 Lightning, so there was a delay. The holdup was a third-party supplier. Not that big of a deal, right? It's expected that Ford will open up their reservations again for the F-150 Lightning on May 9th, and we may even see some price adjustments, even though he said several times throughout his presentation and throughout the entire earnings call that Ford was not going to compete on price. They were going to deliver a good product. Software was going to be a big deal, but they weren't going to be lowering prices to meet Tesla, even though they did lower prices on the Mach-E that we talked about last week. All right, let's jump into our analyst questions. And our first question is on Ford's growth.
So, Jim, you've compared the current environment for EVs to the year 1913, saying that no one should really be surprised that Tesla's cutting price so much. And then I think you asked the question, maybe rhetorically, who's going to blink on growth? So if I put your own question to you, Jim, will Ford blink on growth?
Thanks, Adam. It depends, well, first of all, our first three EVs are all very different in terms of pricing. I think the Lightning's price is up $11,000 since we launched, and E-Transit's up, a lot. So, and of course, we're increasing production to get that scale benefit. So, the most important thing we've learned 3 or 4 years ago is be careful where you compete. And we have selected where we compete extremely carefully. We want to go after segments where we have a great reputation, but there's a lot of conquest customers. And we want to innovate beyond just the powertrain, like Pro Power on board, and as well software. We now know the 3 shippable software stacks: safety and security, productivity for Pro, and of course, partial autonomy. All those are really great hedges against the inevitable overcapacity in certain segments. We could see the overcapacity in the 2-row electric utility segment like years ago, Adam, literally like before we had finished the Mach-E development. We knew this was coming. That's why we got a team together. We brought down the cost of the bill of material by $5,000. We aren't waiting for a minor change. We're not doing things like we normally do. And we continue to get the data off the vehicle to make the software better and better so the customers' vehicles get better every day. So I would say the message from me as the CEO is that we are not going to price just to gain market share. We will always balance a healthy profit roadmap. In the first generation of products, it's pretty challenging because we didn't know what we didn't know 4 years ago when we designed them. But now we're 2 years into designing the second cycle. And in Capital Markets Day, we will take you through why we believe that 8% margin is totally realistic despite all the pricing pressure that we will absolutely get. because everyone wants to grow. So I would say we're quite different than maybe some of the pure EV players that are pricing just for growth. We will always balance that because we want a profitable EV business. And we're pulling every lever we can in the first gen products. The second gen is where we can really make hay.
I don't think this was a very good answer, if I'm being honest. It sounds like we're going to need to cover Capital Markets Day because a lot of these answers are going to be saved until then. What I can say is it does sound like Ford is optimistic about their second gen products, and hopefully they talk about that more at Capital Markets Day. But yeah, not a great answer. I'm going to move on to the next clip because the next clip kind of falls into the one we just listened to, and we'll talk about that a little bit more. So let's go ahead and jump on to that clip.
And Tim, if I could follow up on the pricing discussion, there seems to be a change in the philosophy of the way that people are thinking about this, particularly that new large competitor that is cutting price, and that you can cut price on the front end and not make a lot of money on the hardware, but you can make a whole lot of money on the software and services on the back end. So you're not so worried about profit on the front end. You're worried, you think you can make it up on the back end. As you think about your business evolving over time, do you think in 5 years time plus that you're going to be sort of selling the vehicle as a hardware and making all the money on the back end? I mean, how can we think about sort of the balance of how the money is earned on vehicles going forward?
Well, that business model, I mean, outside of maybe Tesla, that business model is alive at Ford right now in Pro. So when I answer your question, please understand that we are operating that kind of business where our after sales and software is now, large 30+% attach rates. And I would say the answer is I am not giving any relief to my vehicle teams for software sales or any kind of margin advantage. Those products have to get to 8% on their own. And we see the software and especially for Pro, the physical after sales, those attach rates and charging equipment that we're seeing 30+% attach rates, that's plus business for us. That's an annuity we want to create. And we do not want to commoditize our products. That is not our strategy. Maybe someone else's, but not ours. And that's coming from a company that is already doing, like we could do that now with Pro, but we are not going to do that.
Man, I don't want to live in a world where you're nickeled and dimed to death. I know I've said this over and over and over again, but I don't want to buy a, let's just say, $50,000 car and then just be inundated with subscriptions so that I could use heated seats. I don't want to do that. I have a lot of questions when it comes to subscriptions. It doesn't sound like Ford is planning on making their customers pay for things like heated seats. I think that's asinine. I don't like that at all. Like, I'm okay for paying for things like connectivity or Blue Cruise or Cruise if it's Chevy or FSD if it's Tesla. I'm okay with having that as an option because there's hardware in the car to make those things work, but that hardware is still accessible to me through limited features. I'm okay with that. But if there's hardware, like I said before, if the hardware happens to be heated seats, it's already in there, and all I have to do is hit a button, and there's no continuing update on those heated seats. I'm not okay with paying a subscription for that every month. I think something like autonomous software, that's got to be upkept. We want those to stay current. That makes sense to me. Let's continue developing that and pay a subscription for it. Connectivity, I'm okay with that too. Like when I get my Tesla, I opted to not have full self-driving at $15,000, mostly because it would put the car so far out of my ability to pay for it that I wouldn't be able to buy it. But also, I don't think it's worth $15,000. But I am going to opt to pay for the $10 a month or whatever it is, $100 a year for connectivity because I see value in that. I think these companies really need to walk a fine line because there will come a time when everybody revolts, all the consumers revolt about how many subscriptions they have when it comes to their car. And then a car manufacturer like, let's say Hyundai or Kia is going to come in and say, hey, all of these cool things that you have to pay for over here, we're going to give them to you for free. And if you want this slightly better thing, we're going to like autonomy. We're going to charge you for that, but we're only going to charge this much for it. So some automaker is going to take everything that you're paying for, make it standard, and then sweeten the deal with some other subscription plan that's less money. I think those automakers are going to end up winning. I don't know. I'm just very hesitant to trust an automaker and a subscription plan is really what it comes down to. All right, they made some veiled references and some not so veiled references to Tesla cutting prices, reducing margins, but trying to make that up by selling a $15,000 upgrade or a $200 a month upgrade in terms of full self-driving. First of all, I'm not sure that even at selling, let's say, the Model Y for $50,000, Tesla's hitting their margins all that hard. They have pretty high margins as a whole. But I'm curious, how many people do you think are going to upgrade to a $15,000 upgrade just because they saved $3,000 to $4,000 on the price of a car? Seems like not very many. Honestly, I've said this from the beginning. I think that Tesla would be better off just rolling the price of FSD into the car, like make the car $5,000 more expensive. Roll the price of FSD into that car, and every single car you sell has full self-driving enabled, and you're getting $5,000 for every car you sell instead of $15,000 for very few vehicles. We've talked about this in the past. Tesla does not have a great take rate for FSD, which means nobody's buying it or very few people are buying it. I think Tesla either needs to lower the price of FSD or they need to roll it into the purchase price of the vehicle. Okay, that's enough of Tesla. Let's see. Overall, there was a lot in this Q1 earnings call with Ford. They talked about price. They had margin questions. They talked about Ford Pro a lot. We've already talked about the subscriptions, but they talked about that a lot. Not a ton of EV specific questions or answers, but it sounds like they're saving these announcements or talking about this stuff for the Capital Markets Day, which will happen in a few weeks. So we will cover that if it's interesting. If it's not, I'll listen to it. If it's not interesting, we won't cover it. But I have a feeling it'll be interesting. All right, everybody, that is it for me this episode. If you want to email me, you can. It's Bodie, BODIE, at 918digital.com. You can find me on Twitter at 918digital. And yeah, I will talk to you on Friday.